Hello, Uncle Jim here. One of the key things with selling options is picking good companies and ETFs. Today, I want to share with you two companies that I have done really well with selling options on. I'm going to give you details on why I chose them, and I'm also going to show you my results with them. So stay tuned. I think you're really going to enjoy what I have for you. Okay, let's go ahead and get started. First off, I do want to give a quick market update. I believe we're going to continue to have turbulent days. I think they're going to be up days, down days. I don't think we're going to hit new highs. I also don't think we're going to hit new lows. The Fed decided to hold steady in the last meeting. I do think in July they're probably going to hold steady again, even though they've been kind of warning that they're going to do another increase. There's a lot of things going on in the economy that are kind of hurting the economy, and I think it's also hurting the market. Especially, let me just name a few. Commercial real estate is going through a tough time. So many people want to work from home now that a lot of the commercial buildings are half empty, and some are actually more than half empty. And I do know some recent sales of some big commercial buildings went fairly inexpensive. I think they were originally asking almost twice what they ended up selling for. Also think that the student loans, the fact that student loans are now needing to be repaid. And unfortunately for people who do have very high student loans, this delay of a couple of years of paying has been a real negative because now the rates are so much higher. My understanding is a lot of the rates are 7 to 8% now. And back when they decided to hold off and not require people to pay it, the rates were like 3 or 4. So I think that's a negative. I think that's going to hurt a lot of people who have high student loans. Again, another drag on most people out there. Something needs to give. They won't have as much money because they're paying higher fees for their student loans. Also, repos are way up. I've watched some other channels that talk about the used car market and how lots and lots of repos are coming on the market now, and the banks are unloading them, and they're higher numbers, I think, even than before 2019. I think they're significantly higher, or 2020. And then I do feel like a lot of companies have done gimmicks to have better earnings than they probably will have next quarter. I know Google has done that, and I used to work in an accounting department, and I know all about setting up gimmicks to, using depreciation and other means to make your profits look higher than they are. I do believe maybe third quarter we may have lower profits than in second quarter overall, that is. So I think also that'll drag on the market, a little bit of headwinds on the market. And then one positive that I think the Fed needs to consider is there's so much onshoring. I believe all the chip makers are now building plants in the U.S., so they're in need of a lot of workers with that. And then also there's a lot of people retiring. So when the Fed looks at this unemployment rate, it being really low, it's a very different number than it was, 6, 7, 8 years ago with so many baby boomers retiring. Unemployment is it's very different than it was, 6, 7, 8 years ago. I can't remember the actual numbers, but it's a huge amount of people on a monthly basis that are retiring. And I think that's probably going to increase even more. So again, the Fed, hopefully they're digging deeper, they're using common sense, and they're not just looking at statistics or these unemployment numbers, which are unreasonably low. I think actually the unemployment is higher than it seems. And I believe that there's also a lot of fear mongering. There's still a lot of people that are worried about the banks, and it seems like they're not in the middle. They're all on one side, which is, fear mongering. And I personally think the banks are okay. And I think now that the Fed is slowing down and not increasing, they have more time to plan and manage what may be next. And I think what may be next is towards the end of the year, we may actually see rate reductions. I don't think it's going to be huge. I think they probably do quarter point decreases either late this year or early next year. And my guess is we're going to continue with, 3, 4, 5% interest rates for the foreseeable future. I don't think they'll ever get back to the crazy low rates we had because of COVID. So at least that's my 2 cents. As always, you can take it or leave it. But I like to share that in the sense that I'm not, real positive on the market, and I'm not real negative. For people who are option traders where you're selling puts and at times selling calls, it can work out really in your benefit, which is nice. So let's just jump in. So I'm sharing with you today 2 companies that I really like, and these 2 companies I'm going to go into more detail at the end of the video, so be sure to stay to the very end. The 2 companies are Devon Energy and then Zoom. I use Zoom all the time, and I've done really well trading with it, and I've done really well trading with Devon. Devon is my typical type of company I like. It pays good dividends. It's a dividend grower. It has good financials. Now, Zoom's a little different. It does have good financials, but it does not pay dividends. But what I really like about Zoom is they have no debt, and they've met or beaten expectations recently. Now, there is a little bit of fear that they may not produce as much as they have in the past, but I still think it's a really good company. And pricing wise, it's relatively inexpensive. I believe it's in the low 60s. So again, I'll go into more detail about those, but why did I pick those? Again, for those same reasons I just mentioned. I like good companies. I like companies that would grow. I prefer typically companies that pay dividends, that are growing dividends, that have little debt or no debt, and then also financially you can see they're slowly doing better, meaning, maybe they're going through a little bit of a tough time, but 2 or 3 years from now, they'll be doing even better. And that's what I feel about with these 2 companies and pretty much all the companies I invest in. Part of selling options that makes it easier is if you want to own the companies. Now, if you're just selling options to make money and don't want to own the companies, to me, that's a lot riskier than selling options in companies you really want to own. Now, these 2, I actually don't own any because I've been so successful with selling options against them, but it may be a double-edged sword because I do want to own them. So I may actually take a little bit more risk with the hope of being assigned with either or both of them, because I've found I've missed some great opportunities in the past. With being successful with selling puts, sometimes you'll miss some great opportunities of picking up companies cheap, that suddenly grow at a later date. I've had several companies that have been assigned to me that are doing a lot better, since they've been assigned to me. I've got one, I think might be Franklin Resources. I think it's up like 10 or 20%. I think Cisco, and there's a few others. So again, if you're picking companies that you want to own, it just makes it so much easier. And I encourage you to not just focus on making money, but to build a portfolio, a portfolio of companies and ETFs that you really want to own that pay good dividends. Because again, dividends is also another great way of earning passive income. I think it's the most passive income. And that's one of my goals, is how much I can earn on a monthly basis. My yearly goal by the end of this year is $2,000 a month in dividends. And I'm at like $19.20, I think is what my dividends are showing right now on a monthly basis. And my goal by the end of the year is to be at $2,000 a month and to continually increase that. So the other key point is when you find a company you really like, it's important to be sure that they are very optionable. And you might say, well, what do you mean by optionable? I simply mean that there's plenty of strikes, there's plenty of expirations, there's plenty of volume, there's plenty of open interest, meaning there's people putting contracts out there and that want to be filled but are not filled yet. And that's the next thing I do. And that's another reason I like these 2 companies, Devon and Zoom. There always seems to be plenty of strikes and plenty of expirations and lots of volume. And I've been able to roll them whenever I want to, typically, and earn fairly good premium with every roll that I might have done. And then the other part is to keep in mind that when you're working with these companies, and this is kind of common sense, but if you're new to options, it won't be common sense. So if it's a down day and the market's down, like it's been a lot of this week, I may be up today. I haven't had a chance to look since this morning. But on a down day, it's typically better to sell puts. There's typically more premium on a down day, and that can be for a particular stock. Earlier today, I believe the market was down, but Ford was up. So I looked at Ford at potentially selling a call, and Coke was up, and I did actually roll a call with Coca-Cola and earn some premium with that. So that's kind of like the exception. Typically, you're going to want to sell calls on up days. Of course, the market may be down and particular companies may be up. So, in that case, it's good to sell a call. And the reverse is true. It may be an up day for the general market, but a particular company may have had bad earnings or something came out in the news and they may be down, and it may be another good time to sell puts. So just keeping that in mind, that it's kind of common sense. Up day, look at calls. Down day, look at puts. But then also kind of keep track of anything that's very profitable, that, any options contracts that are very profitable. How I do that with my accounts is in Schwab. If you go to the summary page, you can go down to a section that's options, and you can actually sort by profitability. And I typically will do that once a day, and I'll look to see who's really profitable. And that's how I'll make a decision. If something's very profitable, then it's probably a good idea that I could either close it or roll it. And that's what I did with Coca-Cola earlier today. I saw that it was 90% profitable, and I could actually roll it and make some good income or premium rolling it. Now, one other concept that I want to share with people, if you haven't been selling options for long, then there's always this fear, will I be assigned? Will I be assigned? It dipped into the money, is someone going to assign it, or, will it be put to me or called away from me? Once you've been selling options for a while, you'll realize that most options are not assigned early. It's pretty rare for them to be assigned early. The only instances any options have been assigned to me early have been back October when the market was down. There were lots and lots of margin calls, and I did have some stocks put to me because people needed cash. The other exception to the rule is ex-dividend dates. So people will potentially, have something assigned away from you or to you if there's some new dividends. And typically on an ex-dividend date is the date that's used to determine who gets that dividend. So typically, if you're close to in the money and there's an ex-dividend date coming up, you need to be careful. You might want to go ahead and roll a couple days before that ex-dividend date. But the only times that I've been surprised, especially with calls, any calls that have been assigned to me, and I haven't had any in a long time, is related to ex-dividend dates. I believe the last 3 or 4 that were called away from me were related to ex-dividend dates. But overall, you don't typically need to worry. I've got some contracts. I've got a covered call in one of the companies. I think is it Edison? Genuine Parts, I believe is who it is. And it's been in the money for over a year, might be over 2 years. And it was significantly in the money, and it's never been assigned. And now recently it's come down. It's only $4 or $5 in the money. So again, the point being, don't be so fearful about assignment. Rarely do things get assigned early. Typically it's, you only really have to worry about expiration. And that's why in my planning worksheets, again, those are always available I share them with my memberships. I post them every Sunday typically, or Monday if the markets are closed on Monday. And I look at anything that's expiring within the next 2 to 3 weeks and put them on my spreadsheet to manage them and to identify them. It just makes it easier for me. I also have at the top of the spreadsheet a couple of companies that I'm especially looking at that I especially like for that week. Doesn't mean I'm going to trade in them, but it does mean I'm going to kind of keep an eye on them and see if there's some really good premium to actually make those trades. So again, if you want to learn more about my memberships, I do leave details below the links. So you can always take a look. You might be interested. And as always, please subscribe and hit the like button. I'm still a small channel trying to grow. I want people to realize that this is a great avenue to earn passive income and can really help your ability to become financially independent, to do what you want to do when you want to do it. And that's what's happened with me. Without doing this, I probably would have to be working a full-time job. I am still working, but I'm working more on a part-time basis. I have one major client that we're actually going live with a product currently, and over the next coming weeks, it'll probably just be support primarily, so that I won't need to work as much. So again, selling options, dividends, these kinds of passive income really will help you become financially independent, again, so you can do what you want to do, not what you have to do. So next, let's actually turn to the next part of this video. Well, I'll share with you how I did with Devon and Zoom, and then you'll see a live example, or not a live example. I will show you I'm going to go through the history page and show it to you that way. In the past, I've always done spreadsheets because, again, of going live with one of my products. I don't have as much time this week, so I'm just going to show you in the history page on Schwab what these trades look like. It's actually a great way to actually review your trades, and you can export it, and that's a lot of times how I start some of these spreadsheets. But at this point, let's jump into the next part of the video. Okay, now first I do want to talk about each company. So first we've got Devon Energy. Here you can see the range. It's between 44 and 78, and it's currently at 47.68. So it's still a pretty good price to sell new contracts or new put contracts, either vertical put credit spreads or cash secured puts, because it's so inexpensive. So you can probably pick some strikes there in the low 40s or maybe in the high 30s. So it's closer to its low part of the range. Here you can see, if you go back farther, it's jumped way up and now it's down closer to its typical range. And then it also, earnings has done pretty well. It's beaten earnings. It did 140, so at 148 versus 138 was what the estimate was. So it beat that. It did slightly miss the previous earnings, but you can see its price to earnings is really low. And its forward PE is also low. And then its dividends, since it pays a variable dividend, it can change, but typically it's been pretty good. So it's currently at over 9%. And that's an annual dividend rate of 451. And this is what I was talking about earlier. Here you got the ex-dividend date, which already occurred a little over a week ago. So their next ex-dividend date probably won't be till August or September. But this is something that's pretty important to keep up with. So it pays good dividends. I also like to look at debt. Sometimes you can also compare it to other companies. Debt, it's doing pretty well. Debt, it's decreased debt recently. It is a little higher than it was back in 2018. But it typically pays some pretty good premium too. If we look over to the options, you can actually see if we go over here, see there's quite a bit of bid and asks. And if we go to 16, and this is expiring in 1 day, so that's not a good thing to look at. If we look at 43 days, actually I like to do monthly, so August 18th, you can see it's bringing $1.52 at 45, 42.50. So you got an opportunity to do pretty inexpensive spread, $87 and $8. So, and let's see how the volume looks. So it has really good volume. That's what I like to look at. You've got good volume here, and then you've got open interest. You got plenty of open interest. And that's what I like to look at. I also check the rating. Now, it looks like the rating is a little lower on Schwab Equity. I don't give that one as much credit as some of the others. Morningstar is so-so. It's outperformed 4 stars for CFRA. So it's it's a good company. Like I said, I've been selling options on it for a long time and done quite well with it. So that's Devon Energy. The next part of this, after I talk about Zoom, we'll jump in and I'll show you my trades. So Zoom, so it's up today, 66. You can see it's the range, it's pretty close to its all-time low. It's $60, or it's 66, and its 52-week low is 60. Morningstar gives it a good review. Schwab, I don't know why it gives the D percentage ranking. Let's go back over to the equity. There again, you could see how much it's come down. It was way up. It also gets a good review. Both of these companies get really good reviews from Seeking Alpha. I like to use Seeking Alpha, read recent articles from people, and most of the articles are in the positive. There's a few people talking about holding Zoom versus investing more in it, but I mean, they've beaten earnings every quarter, and by a good amount. So 116 versus 99, 122 versus 81. So they have good earnings. Their forward PE isn't through the roof. This is the part I find really interesting, is when you come down and you see no debt. So they did have debt back in 2019, but they've gotten rid of all their debt, which in my mind is really impressive. And they have a good amount of cash. So it's overall a good company. So a lot of times I'll look at this, then I'll probably come over here and do Seeking Alpha. Let me put this over here. So I'll also look at Seeking Alpha, and I'll look at, you can see I've been looking at them earlier today. So here again, it'll give you details. You've got earnings, financials, ratings, dividends at the top. Here you can see it's some of the people are saying hold, so the average is hold. But you can see recently some articles that come out. Zoom, it's time to answer the call. Zoom video, time to buy. And again, I really like it. They're adding more bells and whistles to it, but I use Zoom for my memberships. Whenever I have meetings with people, it's typically through Zoom. So it's, again, a company that's, I think, very strong and doing well. Let's look at Devon. And I think Devon, so it's got a 4.0. So a lot of buys. And again, some more articles. I really enjoy reading these articles, and looking at the comments at the bottom also is really interesting. So if you're not using Seeking Alpha, it's another great tool. It also will have different aspects where you can find out what's going on in the market. You can read other reports. You can also do searches, like if you want to find some additional dividend paying companies that you might want to look at. So it works out really well too. And then let's come over here now. So this is where I can show you. So what I've done is a search. Now if I do condensed view, so this is just going to my history page, and all I'm doing is doing a search for Zoom. And these are the different trades, and it goes backwards. So you can see I've made a total of $670 trading on Zoom. And I believe I also do it in another account that I've also got $300 or $400. And it's, my first one was 45, 55. And I've been sticking to a 45, 55. So here, buy to open, sell to open, buy to open, sell to open. So some of these have expired. I think most of them. Now I closed back on 223. So I've done, half a dozen trades on these, and these go back to 12, 14. So a little over 6 months. And I've made $670 on a $2,000 investment. So, not bad. So that's equivalent to, I guess, what is it, about 35% return. So for the year, if that's, actually higher than that. So for the year, if I say I double this and it's almost $1,300 on a $2,000 investment. That'd be almost like a 65% return. So I'd sold it here at different times. So I would typically, some of them, sometimes I closed it, other times, because here you can see I closed it on 223. And then I opened, this was a roll. So I rolled it out and brought in some pretty good premium. Looks like I brought in 618. And then on 524, open. So I closed. Yeah, so I did a whole new trade. I closed on 524, opened a new position on 616, and again did pretty well with the premium. I typically, whenever I am rolling, I typically try to earn $100 per contract. And with Zoom and Devon, I haven't had to go out as far. I typically, like this was 524, and I was closing at 616, so I closed it early, almost a month early, and I opened a new position in 818. So, and I'll probably close this one early too. Probably within the next month, maybe in July, I'll close it early. But if Zoom goes up quite a bit, then I believe almost every one of these were 55. So that's another interesting point here. So here, 55.45 going all the way back. I haven't changed it. I've stuck with the 55.45 for this vertical put credit spread since the very beginning, which has worked out quite well. So again, it's Zoom. I think is a really good company, and especially if you can pick it up at $55, that would be amazing. Again, I don't own this yet. I've just been selling these vertical put credit spreads. I do want to own it, so I don't know. I may take more risk in my next trade and see if I could pick it up in the high 50s or low 60s, like 62 or something. Just because I might be missing an opportunity. Who knows? Zoom may be worth over $100 in 2 years, and I might miss that upside just by trying to put income. So there may be a point where I need to think a little bit harder about that and maybe take a little bit more risk and let myself get assigned. So now let's look at Devon. And then again, this is the history page, and it makes things really easy using this history page. I believe it's still, let's put this over here. Yeah, it's still condensed, and it does show the total. And you can export this, and it can make it really easy to run some numbers and calculations. So here, I've been trading Devon going all the way back to July of last year, so almost a year. Next month it'll be a year, and I brought in $1,920. Now, about 6 months ago, I started selling another position, so I'd have 2 trades running at any time, each trade with 2 contracts. So I currently have 4 contracts. So this represents more like 4 contracts, which is like $4,000 with my $10 spread. And some of these I think were even smaller than $10 spreads. Like initially it was $33.25, which is an $8 spread. So I've had a lot of scenarios where it's an $8 spread. So again, I started back in July. I made a total of $19.20, which if I just use the numbers of 4,000 and it hasn't even been a year, you're still talking like a 50% return. And again, just like Zoom, Devon, I want to own, and I want to be sure I don't miss a great opportunity of picking up a company inexpensively. You can get to the point where you're selling puts so much and you become successful with it, you miss the opportunity to own the stocks. So here you can see, so the first trade was 7.5, then 7.28. So this one was 120.23. So these were a little bit longer. So actually this must be the second trade that I did. And this was 7.28 and it was expiring 8.26. 22. So I know these must have been a little bit longer. So, and then I did a 12. So in most cases, I would roll them well before expiration because, again, it's the scenario that happens is, like Devon right now is around 47. I would not be surprised to see something happening suddenly up into the mid 50s, and then it becomes very profitable and I can close it. And that's why a lot of times I close it early. And same thing with Zoom. Rarely do I let these expire. I typically do roll them. On occasion, they'll expire. So here I did another one in 812, close, close, open, open. Then 1117, open, open, close. So, and most of these, I think I was a little higher to begin with. I'm currently at 50/40, but these were pretty low. I believe that's when Devon was fairly low over a year ago. And then since then, I've been doing, here I was actually higher, $60. So I did 60/50 for a while, then I did 50/40, and I think at one point at times I find really good premium depending on what's going on with the market. Here's the 33.25. So again, closing and opening, and I did a lot of trades, and this part of this is because, again, it's two different trades that I'm closing and opening. I know this is a little bit harder to follow, but what I'm trying to share in this video is that you can successfully roll these. And now I'm to the point where I think they're all 50/40. Yeah, these are all 50/40 starting back earlier this year. And I've just been rolling them out. And again, two different trades. So I have them alternating. So I don't have them expiring right at the same time. So I believe I have some expiring in July and then some in August. And probably what I'll do is roll them out. The one expiring in July, roll it out to 2 months. I typically like to go out 60 days to pick up more premium and also keep it at least at this price, or potentially if I have to roll it down, I have that opportunity. So this is probably a little bit confusing, but again, my point is the fact that you can do really well with these and you can continually roll them. The fact that I had started this over a year ago, July of 22, and brought in, $1,900, 1920, and the most I've had, I guess, at risk is $4,000. So again, I want to reiterate the fact that at times, once you've been doing this for a while, you'll realize, well, I've missed some great opportunities. So that's the other thing that I'm thinking about with Devon. I'm okay with owning it, and since I like the company, if it does get assigned to me, that's not a big deal. And there's always plenty of expirations to roll to. So it works out well. And again, these are some of the Zoom and Devon are probably, I've been trading them for the longest period of time that have not been assigned to me. I have others like Cisco that I've been trading longer, but they have been assigned. But these currently have not. So I don't know. It might be interesting. Maybe I will get assigned over the next month or so. But so that's it. That's what I wanted to share with you guys. The fact that these are two good companies. They're not that expensive, $50 and $60. So they will work with smaller accounts, especially if you go farther out and do a lower strike. They should be in anybody's watch list. So I encourage you, if you don't have these on your watch list, you probably want to add it. So that's it. As always, please add any comments if you don't like the format of this video or something along those lines, or if you have questions. I try to answer all my comments, so please leave a comment below. And thanks for joining me. I hope you come back next week. Bye-bye.